Can China's stimulus stand up to scrutiny? Welcome to Macro Matters, your regular look at what's driving the global economy. I'm Ramzan Karmali. The Chinese government is fully confident that it can achieve its full-year growth target after it revealed plans to issue 200 billion yuan, that's $23.8 billion, in advanced budget spending and investment projects from next year. But investors who had banked on more support seemed disappointed, and they weren't alone. The World Bank now believes the country's growth rate is expected to decline further in 2025, despite the raft of recent stimulus measures. So is the pessimism warranted? Well, to help answer that and more, I'm joined by Lin Song, Chief Economist, Greater China at ING. Lin, thanks so much for joining us. So, after last month's revelation of stimulus measures by Beijing, there seemed to be an air of optimism surrounding the country's economy, but that seems to be eroding. Why do you think that is?
Yeah, you're absolutely right. Markets are clearly very optimistic after the PBOC's big policy moves in September. And I think after the Golden Week holiday, expectations were sky high coming into today's NDRC meeting. So leading up to the meeting, there was a lot of discussion in the market about potentially seeing a fiscal policy support package roll out. There was rumors in the markets for maybe trillions of RMBs of new bond issuance. But ultimately, what we got today was a relatively high level focus, repeating kind of the larger themes rather than specific details. So the NDRC still covered themes along in a positive direction. They indicated in strengthening countercyclical measures to support growth, supporting domestic demand, optimizing the business environment, promoting property sector stabilization, as well as a capital market stabilization. So while these are all measures in a positive direction, I think many investors are hoping for more detail on the total scale of stimulus support, as well as how exactly these are going to be implemented. So this kind of information could still be unveiled by the other government ministries in the coming weeks, but at least for today, I think the initial reaction in the markets was disappointment.
You talk there about the details, but what exactly is missing from these announcements? Is it just a case that investors want bigger measures?
Well, I think one of the journalists was asking like what was the scale of the sum of policies that was going to be introduced. I think obviously having a big headline number is an attractive feature for investors, but I think they also want kind of a clear split on like how the money would be spent, and so they can gauge whether or not that would be effective in restoring growth momentum in China.
Now, in your opinion, what's the most significant measure that you've heard so far, and what impact could it actually have?
Thus far, I'd have to say the biggest moves have been on the monetary policy side for now. We had a larger than expected rate cut to the 7-day reverse repo rate. They combined that with a 50 basis point cut to the triple R as well. And the PBOC also indicated that it's ready to do more if necessary. Those are just kind of the traditional policy tools, but we also saw new measures to support the property market as well as equity markets. I think most significant really is not one specific measure, but I think kind of a broader shift towards supporting demand, which is something that economists have been calling for some time. So on that front, we also saw like a cut to existing mortgage rates, which would help ease household burdens. We also saw the issuance of consumption vouchers and cash allowances to low-income households. So while the current scale of these programs isn't too large at the moment, what it does do is it sets kind of a precedent for similar policies to be rolled out in the future. So looking at other kind of case studies, we're pretty positive that this kind of policy will be helpful in kickstarting kind of a virtuous cycle to the economy.
Now, Beijing still seems to be confident about its 5% growth target for 2024. How about yourself?
Well, I think given the weak kind of data that we've had in the third quarter, it will still be quite challenging to hit 5% this year, especially as when the policy stimulus rolls out, we'd already be well into the fourth quarter. With that said, if it does come quicker and more aggressive than expected, I think achieving a growth rate of near 5% is certainly still on the table. What we're looking at right now is for GDP to come in around 4.8%. In my view, that technically serves to accomplish the year's growth target of around 5%.
Now, in the past, we know that whenever the Chinese economy has had a bit of a boost, the rest of the region seems to have benefited. So what impact do you think these policies could have on the wider Asia-Pacific region?
Well, I think ultimately the impact depends on how effective the moves will be in affecting China's actual growth trajectory, right? And it's pretty difficult to really gauge this until we have more details on the fiscal policy side. So my current view is that we will see fiscal policy support roll out in the coming weeks and months. As mentioned earlier, it's probably a little bit late to substantively affect the 2024 outlook, but I think relative, as you mentioned, the World Bank, we're a little bit more optimistic on the 2025 outlook. So we're upgrading our 2025 forecasts after the policy blitz. If things do play out in this manner, I think stronger growth in China is obviously a big positive for the Asia-Pacific region as a whole. Many countries have China as their top trade and investment partner. If we also see a sustained recovery of China's demand, this bodes well for commodity exporters. And if the household side recovers, we can also see a stronger boom in Chinese tourism as well. So in addition to the China story, I think the global environment in general is also shaping up to benefit emerging markets as well. So that is a positive for the region. Again, it's maybe a little bit early to say as we don't have the full extent of the details yet, but I think we're cautiously optimistic on the region moving forward.
Well, on that cautiously optimistic note, I have to thank you. Lin Song from ING, many thanks for your thoughts. And that's Macro Matters. Don't forget you can watch more videos on Reuters.com.